But now the big ones, Bitcoin and Ethereum, are cascading. I'm beginning to wonder whether one day, sometime soon, we won't even need to have these quoted on the side of the television screen anymore. Won't need, or maybe shouldn't. I think it's time we start questioning the fundamentals of crypto. And I don't like when we question the dot-com movement in 2000, 2001. When all things crypto took off with great fanfare, like the dot-com bombs, we were told that they were stores of value, that they meant something, that they would be around for a long time. I believe that rap. 300 of them went out of business. I'm at least big enough to admit that this time I was wrong about crypto. I wish the real promoters would do the same. Just because you make money in it, which I was fortunate enough to do, doesn't necessarily mean that it's...
Bear markets bring a lot of fear, uncertainty, and doubt. In fact, when the FUD gets completely overwhelming that even die-hard crypto investors begin to doubt their investment choices, we know we are close to the beginning of another bull market. After Federal Reserve Chair Jay Powell's very hawkish speech in Jackson Hole on Friday, many asset classes took a plunge. The Dow Jones Industrial Average dropped over 1,000 points or 3.03% to 32,283.40. The S&P 500 fell 3.37% to 4,057.66, and the Nasdaq Composite slid 3.94% to 12,141.71. These major U.S. stock indexes have dropped even lower as of press time. The Dow Jones Industrial Average is now trading at $31,510, the S&P at $3,955, and Nasdaq at $11,816. Bitcoin, the world's largest cryptocurrency, also went from a high of $21,763 on Friday to $20,200 in the early hours of Saturday. On Tuesday, it plunged lower to $19,617, but has since recovered and is once again back above $20,000. This year alone, Bitcoin and Ether, the world's largest cryptocurrencies, have lost over 50% from their January 1 prices. In contrast, the S&P has only lost 16.8% of its price. This is what Jimmy Cramer and other FUD advocates are holding on to, not the amazing gains that these cryptocurrencies have had. For example, between July and November 2021, Bitcoin gained a hopping $40,000, moving from $29,000 in late July to a peak of $69,000 in November. But due to a string of unfortunate circumstances, including a massive implosion that took out billions of dollars, the cryptocurrency market is where it is today, and as expected, the FUD is coming in droves. According to recent Bloomberg reports, David Kelly, the chief global strategist at JPMorgan Asset Management, has urged investors to dump cryptocurrencies. The chief strategist believes the persistent hawkishness of the U.S. Federal Reserve will bring more volatility and massive price declines for crypto and other digital assets. Welcome to today's video on Savvy Finance. In this video, we are going to examine some recent FUD remarks about the cryptocurrency industry amid the ongoing market sell-off and bearish macro environment. Please watch, like, and share this video. Also, ensure you drop your comments and observations below and subscribe to the channel for more videos like this. Thanks, and enjoy the video. David Kelly, the chief global strategist at JPMorgan Asset Management, is convinced that the current U.S. macro environment is not the best for cryptocurrencies. As such, he has warned investors to dump their cryptocurrency investments. He is also bearish on large-cap tech stocks because of their correlation with the cryptocurrency market. Kelly said investors should avoid large-cap tech stocks and sell off their cryptocurrency investments, including Bitcoin. He also warned U.S. investors to brace for more volatility in the future, but he believes the economy could even out by the end of 2023. The economy has got one foot into a recession and the other on the banana peel now, Kelly said, according to Bloomberg. Like JP Morgan, global investment bank Goldman Sachs is also concerned about the impact of Powell's speech on the markets. The investment bank is urging investors to buy commodities now, as its analysts see commodities as the best asset class to own during a late-cycle phase where demand remains above supply. It also noted that equities could suffer as inflation stays elevated and the Fed is more likely to surprise on the hawkish side. In his speech last week, Powell said, "We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we are confident the job is done." On Saturday, European Central Bank Board member Isabel Schnabel also noted that central banks around the world risk losing public trust and must now act forcefully to combat inflation, even if that drags their economies into a recession. While not outrightly warning against cryptocurrencies like JP Morgan, Goldman Sachs' statement on commodities also sounds rather bearish for cryptocurrencies, especially as it notes that equities, which have been closely correlated to the crypto market, could suffer in the coming months. American TV personality and host of Mad Money on CNBC, Jim Cramer, has also warned investors about cryptocurrencies. On the most recent episode of the hit show, Cramer claims that investors should dump all digital assets, including cryptocurrencies and NFTs. He explains that these assets could evaporate investors' life savings while also admitting that he was wrong about crypto because it has failed to perform as a store of value. "I think it's time we start questioning the fundamentals of crypto," Cramer said. "We won't even need to have these quoted on the side of the television screen anymore," he added, questioning whether CNBC should even be giving any reports about cryptocurrencies. The FUD doesn't end there. According to reports, the U.S. Securities and Exchange Commission has also warned about scammers exploiting investors' fear of missing out on social media. If a crypto investment opportunity sounds too good to be true, it probably is, the U.S. regulator cautioned in an investor alert titled, "Social Media and Investment Fraud." On Monday, the SEC's Office of Investor Education and Advocacy warned that fraudsters use social media to scam crypto investors. It also warned investors to never make investment decisions based solely on information from social media platforms or apps. Promises of high investment returns with little or no risk are classic warning signs of fraud, the SEC noted in its report. Anyone considering investing in crypto assets or any crypto-related investments should take the time to understand how the investment works. Check out the background, including license and registration status, of anyone offering you an investment in securities using the search tool on investor.gov, the security watchdog added. While it's always important to make these checks before putting your money in anything, the SEC has never been crypto-friendly. According to a report from Forbes, the regulator is investigating Coinbase and all cryptocurrency exchanges in the United States. Last month, Forbes reported that a staffer from U.S. Senator Cynthia Lummis's office said all crypto exchanges in the United States, including Binance and Coinbase, are in various stages of being investigated. Over the next few weeks, we are going to see more of these FUD articles, and when the bull market rolls back around, doubters like Jim Cramer will return to make some more money, only to spread more FUD during the next bear market.
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right, iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
It's the crypto circle of life. Let us know your thoughts and observations in the comments section below, and don't forget to give this video a thumbs up. Also, ensure you subscribe and turn on post notifications so you never miss any of our regular uploads. Thanks for watching.